Hello everyone, this is Dr. Shah once again with another video. This is part 2 of a video series based on solving university question paper of December 2022 of financial accounting. Again, a very important video for all the TYBMS SEM 5 student. We have already solved one sum in our previous part 1 video. Now this is part 2. Let us check in this particular question, which is the simple topic that you all can understand and solve easily in the paper. Okay, now the next question was question number 3A. Vishal Limited exported goods to James Trading Company, Germany, worth $1 lakh on 20th Jan 2022, on which date the exchange rate was $1 was 70.5 rupees. The payment for the same was received on 25th Feb, 23rd March, 24th April, and 28th May, all $25,000 each installment, and the different rates are given. Vishal closes his books on 31st March every year. The exchange rate was on 31st March was $1 is 68 rupees. Pass journal entry for the following transaction in foreign currency in the books of Vishal, and also prepare foreign exchange fluctuating account. ठीक है. Very simple. First, we'll start with the journal entry. For that, we need to do some working. It is given that on first of all, you're an exporter. You're selling goods. Okay, you're selling $1 lakh ka goods on 1st Jan when the rate was 70.5 rupees. So you're the working is there. On 20th Jan, you're exporting, meaning you're selling. On 20th Jan, $1 lakh at the rate of 70.5. We multiply, we got the value as 70,50,000 rupees. So you're selling may debit the receiver, credit what goes out. So my first journal entry will be James trading account debit to export sales 75,50,000 on both the side being goods exported. That is the very first entry. Okay. Now on 25th Feb we are receiving money, the first installment. So on 25th Feb we are receiving the payment of $25,000 at the rate of 70.75. We multiplied, we got 17,68,750. The moment we receive, we have to check whether we have incurred a loss or we had got some gain. Okay, it's very simple. We sold at 70.5 ka rate and we are receiving 70.75. So we are receiving 0.25 extra. So that's a gain. 0.25 into $25,000 that you're going to receive. So that is a profit of 6250, a gain of 6250. Okay. Now remember, under gain, FEF is always credited. You are receiving money, so bank account debit from whom? From James Trading. So my entry will be bank account debit to James to FEF. Always remember, gain may FEF is always credited. Okay, bank we wrote down the amount, FEF we wrote down the amount, subtracted, and we got the balance. That was entry number 2. Next, on 23rd March, again we are going to receive. So on 23rd March, again payment received at the rate of 70. We multiplied 70 lakh 50. Again, you sold for 70.50 and you're receiving only 70. So there's a loss of 0.5 into 25,000. So 12,500 is the loss. Always remember, loss will always be debited. So my entry will be bank account debit, FEF account debit to James. Okay, we wrote the bank value, we wrote the FEF value total, and we put it on the credit side. Okay, that was the entry number 3. Now for the fourth entry, now if you look carefully, it is given 24th April. Now April comes after 31st March. So that is for the next year. So in order to solve that, first what we have to do is on 31st March, we need to find what is the balance due, and on that balance due, what is the gain or loss we have made. So remember, $50,000 is spending, which you are going to get in the next year. Okay, again, you had sold it for 70.5, and if you would have received that amount in on 31st March itself, you would have received at the rate of 68, because 31st March ka rate is 68. So there's going to be a loss of 2.5 as on 31st March into 50,000. So we get the value as 1,25,000 ka loss. So on 31st March, FEF to James, 1,25,1,25 being loss transferred. Okay, that is for the balance. Whatever is balance due, on that you just have to check whether you earned a gain or a loss, if that payment would have been made on 31st March itself. Now last entry for the first year, check for all the FEF. We have a gain of 6250, we have a loss of 12, we have a loss of 1,25,000. So loss is a greater amount. So 1,25,000 plus 12,500 minus 6250, because gain is a smaller amount, so we'll subtract it. So we still get a net loss. Remember, FEF under loss is debited. So whenever you're going to transfer, it will always be credited. So on 31st March, PNL account debit to FEF 131,250, 131,250 on both the sides will be recorded, being loss transferred on your end. Now this was for the first year. Now remember, whenever now you're going to go in the second year, I will not consider the selling rate. Now we will consider the rate which was there on 31st March, which is 68. So now in the second year, whenever we are going to sell, whenever we're going to receive, we are going to compare it with 68 and not 70.5. So next entry. For the next year on 24th April, again I'm receiving 25,000 at the rate of 72.6. We multiply, we got the value. Now for loss and gains, the balance rate was 68 and we are receiving 72.6. So we are receiving more, it's going to be a gain. So 25,000 into 4.6, 1,15,000 ka gain. Gain mein FEF is always credited. So here the value will be, the entry will be bank to James to FEF. Bank may we have written, FEF may we have written, subtracted, whatever is the difference will go to James trading. Similarly, for the last transaction on 20, okay, now same 20th May 2022, the same transaction. Okay, 25,000 into 68.9, so we get the value as 17.22500. Okay, again balance 68, we are getting 68.9, so you're getting extra 0.9 into 25,000, so 22,500 is the gain. Again gain bank to James to FEF. Okay, that's it. Last entry on 31st March will transfer the gain, both are gain. So gain may FEF is down, whenever your transfer is going to be debit, so it will be FEF to PNL 137,500, 137,500. So this is how you all had to solve the journal entry. Now they asked us to even prepare FEF account. So now what I'll do is we'll note down all the journal entry. So these were all the journal entries. Okay, now we have to prepare FEF account. Very simple. We just have to consider FEF. Wherever the word FEF is written, the opposite entry needs to be passed. So if it is to FEF, it will become buy, but take the FEF amount. If it is buy, we'll take it the opposite, so it will come to but FEF amount. If it is buy, so again 2 FEF. If it is 2, it will become by FEF. Okay, so here it was first, it was 2 FEF, so it will become by bank 6250. Here it was by FEF, so it will become 2 James 12,500. Again, FEF is by, so 2 James 21,25. And FEF to PNL, so it will be by PNL 131,250. You tally, it will tally by itself. Similarly, in the second year, it was 2 FEF, so it will come by 115,000. Again, here it is 2, so it will come by 22,500. Here it is 2, so it will become, it is by, so it will come 2 to PNL 137,500. You tally and it will get tallied by itself. So this is how you all had to solve the problem sum, which was based on foreign exchange fluctuating account. You have to pass the journal entry and then prepare the FEF account. Okay, chalo. I hope everyone have understood this. With that, we will be ending this video here.